I think the big financial story this week is going to be the Dow Jones Industrial Average closing above 50,000 for the first time ever. You know, Donald Trump has now promised to double that to a 100,000. But 50,000 on the Dow is not really that significant when you consider that gold is almost 50,000. In fact, gold settled the week just below, I think, 4,957. So it's close enough to 55,000. But if you divide the price of gold by the Dow, that's 10. The Dow is only worth 10 ounces of gold. Back in 1999, it was worth more than 40 ounces of gold. So a 75% decline in what? 26 years, 27 years? That is a major bear market. The reason the Dow appears to be going up is because the value of our money, US dollars, are going down. So you need more dollars to buy the Dow, and you need even more dollars to buy an ounce of gold. This is what the media doesn't want to pay attention to. This is what the Trump administration doesn't want anybody paying attention to. Inflation helps the government in many ways. Obviously, it's its silent partner in tax revenue. It can tax the public without taking their money. It just takes the purchasing power away from their money. But it also creates a false sense of affluence because the numbers go up, the numbers get bigger, and so people think they're richer because they own a 50,000 DA. But in real terms, they're poor. In fact, the whole affordability crisis that both parties seem to acknowledge that there's an affordability problem. They just argue over who's to blame. The Democrats are blaming it on Trump. Trump is blaming it all on Biden. Both parties share the blame for the affordability crisis because inflation has been something that both parties have agreed on. They both believed in creating inflation. In fact, Donald Trump brags about the big, beautiful bill, which is extremely inflationary. He cut taxes on tips, on overtime, on Social Security. He made interest loans on cars tax deductible. All of this simply replaced taxation with inflation. Consumers are given more money to spend because their taxes are lowered, but government spending goes up. The government spends more, consumers spend more, but nobody produces more. The difference is covered by the Fed. It's inflation. And when you go and you buy products, you pay higher prices because the government got bigger. The reason there's an affordability crisis is because government is so expensive. The cost of all that extra government is built into the price of everything that we buy. So the reason things are expensive is because you're also paying for government when you do your shopping. And so that's what's making everything unaffordable. And that's why it looks like the Dow is going up, because our money is going down. At the root of this so-called affordability crisis is the loss of value of the dollar. You need more dollars to buy things. And if you don't have more dollars, well, things become more unaffordable than they were. And because the dollar is going to keep losing value, in fact, it's going to be losing value even faster in the future than it has in the past, the affordability crisis is going to get much worse. Now, today we had this huge rebound in everything. And ironically, I think it was led by crypto in Bitcoin. Bitcoin was up 10% today, one of its biggest up days. Strategy stock was up 25% in one day. Now, the financial media wants you to believe that this means that, hey, it's a new bull market. Everything is great. Buy crypto, buy Bitcoin. There's an old saying about bear markets. They slide a slope of hope, right? That's the opposite of the bull market that climbs a wall of worry. During bull markets, the biggest moves tend to be down in clear throat single days. That's why we've seen some huge drops in gold and particularly silver prices in recent weeks. These are big drops in a bull market. They're designed to scare you out, to get the weaker longs to throw in the towel and sell their gold and sell their silver, right? It tests the metal by trying to scare people out, trying to get you to throw away a winning hand. That's why I've been doing a lot of these updates, and I've been on X encouraging people to buy these dips. In fact, yesterday when I posted on X, silver hit $67. I believe 67 after having traded 121 a couple of weeks earlier. Now, it was up today. It closed about 7,765, which, was a nice day up, but still way down. But the media is still talking about the silver bubble and how the silver bubble popped. And it was crazy that silver went to 121. Look, it was a bit crazy how quickly it went to 121. But what's even crazier is that it took that many years to get to 121. It should have been there earlier. And it will be there again. It will be there a lot sooner than people think. But the media, again, is trying to scare people out of gold, trying to scare people out of silver. Meanwhile, I think what's going to happen before we hit a new high in gold or silver, I think we're going to hit a new high in gold and silver mining stocks. They were up nicely today, about 5.5%, 6%, but they're still way off their highs. But given that gold and silver are still way off their highs, silver is what got be like 20% off. Gold's still about 10% off its highs. I think as they make new highs, the mining stocks will make new highs first, because I think one of the reasons that investors were so reluctant to buy the miners is they were worried about a big drop in the price of gold or silver because they kept rising. Well, now we've already had the big drop, right? It's now behind us. And so I think people ultimately won't be afraid of another drop when the drop already happened. And I think we'll have a bit of a slower rise this time that'll be more sustainable. And I think that will, give a good opportunity for the mining stocks to get some real traction, the opposite of a bull market. Because if the bear market is sliding a slope of hope, today's rally gives people hope. False hope. People are relieved. Oh, I'm glad I didn't sell yesterday. I'm glad I held on. Look, we had this big rally. We're back. We're going to the moon, right? It helps you build a false sense of confidence. You're now hopeful that the worst is over. You wrote it out. Now you just got to hold out. Well, the next thing you know, we're going to be making new lows. In fact, one of the interesting things about the Bitcoin decline is how orderly it's been. We haven't had any major 5 or 10 minute 10% collapses, which have happened quite often with Bitcoin. You get one of these flash crashes. There's a panic and there's a big drop. This has been a very orderly decline. I think where there might have been some panic was in silver prices. There was panic, not Bitcoin. And in fact, one of the reasons that I think that the price of silver was down so much yesterday, it was down 20% in one day on there. There was no real news that would have affected it. What I think affected silver was margin calls in crypto. Now, there may have been some in silver as well, because some silver speculators who maybe put their positions on Clear's throat more recently got caught up. But I think that a lot of the margin players, snorts, who own a lot of crypto-related assets, also own gold and silver related assets as part of the de-dollarization trade. Right? A lot of people think that trade includes gold and silver and Bitcoin. Now, I don't think Bitcoin is part of that, right? It's got nothing to do with it. It's a market unto itself. But the fact that people believe that means that there are a lot of traders out there that have positions in both assets. And if they had those positions on leverage, and we had a 50% drop in Bitcoin, and we also had a big drop in silver, right? It's likely that they had margin calls, and it's also likely that it was easier to dump on their silver than their Bitcoin, because I don't think that there was enough liquidity if they had bigger positions. Now, clearly they moved the silver market by getting out of silver, but they would have moved the Bitcoin market even more. So I think there was some forced selling, and of course, the traders can see that they dropped the bids. They know that there are sellers that have no choice, so they back away, and whoever sold out yesterday, because they had no choice, got a lousy price. And that's why I don't encourage any of my clients at my asset management company or my customers at Shift Gold to go on margin. It's precisely because of days like yesterday, where you have big drops and people don't have the staying power, and they're forced to sell, and they turn a temporary paper loss that would ultimately be meaningless into an actual realized loss that means something. So I think that what happened today in Clear's throat, Bitcoin is the dead cat bounce, is a bear market rally. Same thing with strategy stock, right? Strategy stock, as of yesterday, was down more than 80% from its peak price last year, yet the stock was up 25% today, 25% gain in one day. But despite that 25% gain, it's still down 75% from its peak. So it barely moves the needle from down 80% to down 75%. But again, that's a bear market rally. Strategy is going lower. In fact, one of the biggest tells about what's going on there is their average cost on their Bitcoin. Their average cost is just over $76,000. And even though we had a 10% rally today, Bitcoin is barely above $70,000. So MicroStrategy is down on its Bitcoin that it's been buying over the last 5 years. Imagine if Strategy had bought gold or silver instead of Bitcoin, how much more the company would be worth, because they actually would have had a big gain on their investment. Instead, they lost on their investment. But of course, had Michael Saylor told people that he was going to buy gold or silver with the money he got from selling stock, he wouldn't have been able to sell all that stock at a premium, because nobody really wanted to buy gold and silver. They wanted to buy Bitcoin because they thought it would have a great return. Well, they thought wrong. It had a lousy return. In fact, if Saylor had just put all of his money in a money market, remember his big pitch on why he needed to buy Bitcoin was that he was losing all this money to inflation. He couldn't just leave his money in cash and earn 4 or 5% interest, because inflation was higher than that. And so he had this big problem. What am I going to do with all my cash, because I'm getting hit by inflation? Now, the obvious solution was buying gold and silver. Had he done that, he would have had a great inflation hedge. But instead, he came up with a harebrained scheme of buying Bitcoin. And not only did he not keep up with inflation, he didn't even keep up with the money markets. He didn't even keep up with taking his cash from his balance sheet and stuffing it under his mattress. He has fewer dollars after 5 years of buying Bitcoin. Strategy has less cash to show for it than if they had done absolutely nothing with their money. So he made the problem that he claimed he had even worse with his cockamy solution. Meanwhile, I bet you one of the reasons that Bitcoin rallied so much today is that Strategy was a big buyer. We'll find out on Monday, as we always do, how much Bitcoin Strategy bought, but I bet they bought a lot of it, and they did it all today, right? But by next week, I expect the price of Bitcoin to be lower, maybe quite a bit lower. The same thing with Strategy. But all this, I believe, is going to be bullish for gold and silver, because I do think that for many years now, the Bitcoin, promoters have created a cloud over gold and silver. That Bitcoin was being promoted as superior to gold, not just digital gold, but something that's better than real gold, that whatever you think real gold is going to do, digital gold will do it better. And so people were buying Bitcoin who might otherwise have bought gold because they thought they were doing something smarter, something better. And the fact that gold went sideways for so long just reinforced that idea because it was being reinforced by the market itself. Gold was doing nothing and Bitcoin kept going up. So that was validating the thesis that gold's time had passed and the new times belonged to Bitcoin, right? Gold was dead, long live Bitcoin, right? And I kept saying, no, that's not the case. And that was proven last year when the de-dollarization trade really came into being on Wall Street. People appreciated why de-dollarization was taking place, why it was just getting started. And you saw the big move up in gold and a corresponding decline in Bitcoin. And in fact, when gold finally had that big correction, all the Bitcoiners came out and said, aha, now it's Bitcoin's time. All the money that was coming out of gold and silver, now it's going to rotate into Bitcoin. And you know what happened to Bitcoin? Then it collapsed again. So Bitcoin went down when gold was going up, and then it went down when gold was going down. That means the bubble has popped. The only question is how much longer is it going to take the air to come out? But the writing is on the wall. Look, even Tether can see that. It was a Bitcoin gold debate. I decided to make it a Bitcoin Tether gold debate because before they had us on, a couple of hours earlier in the day, Tether ran a big promotion for their gold-backed token, Tether Gold. And I thought it was an excellent promotion. And so since we were at the Tether conference, I decided to focus more on Tether Gold than what I'm doing with T Gold, which, it's the same letter. But it's the same concept that if you really believe in tokenization, if you believe in crypto and you want digital gold, then you can have digital gold. You don't have to settle for fool's gold. You don't have to settle with a counterfeit imitation like Bitcoin. You can actually have digital gold. You can have something like Tether Gold, or there are a lot of other companies. In fact, while I was down there, I ran into 2 or 3 other people that had their own tokenized gold projects that they were doing. There are so many of them. I talk to these people all the time. This satisfies the real demand. Tokenized gold does what Bitcoin can't. Bitcoin promises, but it can't deliver because tokenized gold is digital gold, right? It's real gold. The token is just the digital representation that you own the gold. It's not even, you don't even own the token. You own the gold. The token is your claim check. It's like if you go to a restaurant and you give them your coat and they'll give you a ticket, right? You don't own the ticket, you own the coat. The ticket just lets the coat check person know that it's yours. When you give it to them, they go and find your coat. That's what's going on with tokenized gold. You're not even loaning the gold to the company that issues the token. It's your gold. The token just lets everybody know it's your gold. And the most important part about the token is that it's negotiable, right? I like if I could give my claim check to a buddy and they can go and get the coat and put it on and wear it, right? They're not going to check the ID as long as you got the ticket and you go. They're going to give you the coat, right? So the ownership of the coat goes with the claim check. Well, it's the same thing with tokenized gold. I have tokens that represent gold ownership. If I want to give either as a gift or as payment for services or a remittance that I'm sending back to my family, if I want to send money to somebody, I can send gold. I don't have to send the physical gold. The physical gold sits in a vault. In the case of Tether Gold, it's buried deep in a mountain in Switzerland. Pretty safe place, right? You don't have to go to Switzerland and dig your gold out of that safe, that vault in that mountain. All I have to do is send somebody the claim check so that now they own the gold that's in that mountain, right? And they don't have to get it. They could give it to somebody else. So as people start to realize this, right, because one of the new aspects of crypto that is really being promoted is stable coins and tokenization. What is a stable coin? It's tokenized currency, tokenized dollars, tokenized euros, right? So you can have that. You can have a tokenized dollar. But why? Why the hell would you want to tokenize a dollar? If you're going to go to the trouble of getting a token, why have it backed by dollars? The dollars are going down. You don't solve the problem of getting out of the dollar if you buy a US dollar stable coin. Tether knows this, right? They're the biggest issuer of US dollar-backed stable coins, yet they're now the biggest buyers of gold. In fact, they just bought Gold.com, they didn't buy the whole company. They bought into it, which used to be Amark, which changed its name to its website Gold.com, and they bought into that, and they, own a number of other retailers of precious metals. So now you've got Tether not only in the tokenization business, and Tether has been the biggest buyer of gold stocks. They've been buying a lot of the royalty companies in particular, a lot of the ones that we own in our funds that I own personally. But now they've made their first foray into the retail of physical precious metals. So they're kind of bringing together physical precious metals with their token, which is exactly what I'm doing with T Gold. It's the same idea. They're just obviously able to do it on a bigger scale. But as the attention in crypto is focused on tokenization and stablecoins, this is the perfect time for gold to shine, and the perfect time for gold to show that it can do what Bitcoin can't, that it can be digital, that digital gold is not Bitcoin. Digital gold is gold that's owned or the ownership is recorded digitally, so that if I want to engage in commerce, I can do so with gold. One of the reasons that people haven't used gold over the years is because it wasn't convenient. It was more convenient to use dollars than to use gold. But what people have done with gold is used it as a store of value, because there it really outshines the dollar. If you hold dollars, you're not storing anything. The dollar is losing purchasing power, as you know, referenced or explained with the Dow. You can buy a lot less of the Dow today than you could 25 years ago if you have dollars. But had you been saving your gold over the past 25 years, you could buy a lot more of the Dow. The Dow is cheaper for you if you save gold. So people recognize that the dollar is good as a medium of exchange, but it's lousy as a store of value. So what do people do? They use dollars as a medium of exchange, but they use gold as a store of value. But what tokenization allows in the internet is it allows people to use gold for both a store of value and as a medium of exchange, because it's actually better than the dollar at that too. But now that you have this technology where people can instantly transact in gold just as easily as they can in dollars, and in fact you don't even need a banking system now. You can do commerce. You can engage in commerce without even having a bank account. You can have an account where you have your gold, or you can have your tokens in your wallet, and you can have as much functionality as if you had had a bank account. But you don't have to pay for a bank account, and you don't have to be a creditor of a bank. When you have a bank account, you've loaned your money to the bank. Right now, you count on insurance, government insurance, to protect you, but you really don't have much protection because inflation is going to wipe you out. But with gold, you don't have to worry about inflation because nobody can inflate gold, right? Gold, the supply of gold is going to grow very slowly over time, and the population will grow by at least that amount, if not more. So gold is a reliable long-term store of value. But now it's being turned into a very efficient medium of exchange, even for micropayments. You'll be able to get paid and pay in gold much cheaper than you could in any cryptocurrency like Bitcoin. And you probably, at least as cheap, if not cheaper, than using the banking system. So there's no reason for Bitcoin when you have gold, and the advantages that people believe that Bitcoin had over gold disappear once you tokenize it. That's why I've tried to focus my gold Bitcoin debates on Bitcoin versus tokenized gold to neutralize all the objections that the Bitcoin pumpers had over gold. That the main thing you have now behind Bitcoin is the media, Wall Street, and the Trump administration, right? They're all trying to push people out of gold and into Bitcoin because they have a vested interest in selling you on that con. Wall Street makes a lot of money off of the crypto industry. The politicians now are in bed with crypto, and they're making a ton of money. And the media is getting rich off of all the advertising dollars from the crypto community. But that's it. There is no real validation. In fact, I was watching the MicroStrategy conference call last night on X, and the first slide that Michael Saylor showed as to why this is the time to buy Bitcoin, right? Even though it's, way down and continuing to fall. The number one slide was a picture of Donald Trump and said, "We have a Bitcoin president. We have a president who wants to make America the Bitcoin capital of the world. And so, because the U.S. government is behind Bitcoin, you should invest in it." That's the last reason to want to invest in it. Like, the government knows what they're doing. This is why the government is supposed to stay out of the economy. This is why you don't want a centrally planned economy. You don't want the government picking winners and losers because they always pick losers. And that's what Trump did when he picked Bitcoin. But you now have all this capital that has been misallocated to Bitcoin and crypto because the government steered it there. People wanted to invest in Bitcoin because the president was investing in Bitcoin, and because they believed that the president would pursue policies to enrich himself, and everybody wanted to jump on that bandwagon. So we are misinvesting capital that could have gone someplace else, and that would have gone someplace else. If the government was neutral, now has been misdirected into crypto, which is going to weaken the U.S. economy and make it even more dependent on the rest of the world that is in the process of cutting us off. In fact, I was listening to a interview with Trump, and he said the reason that we have to do this, the reason that he wants to make America the Bitcoin capital of the world, is if we don't do it, China will. And China's probably laughing hysterically. They have no interest at all in being the capital of Bitcoin. They don't want that industry. They're building real factories that make real goods that the world needs. They're not making meme coins like we are, and they're not telling their people to buy Bitcoin. They're not buying Bitcoin. They're loaded up on gold. They're buying gold. In fact, Scott Bessant, who testified before the Senate and House this week, and it was a real embarrassment to see this guy. I mean, I was embarrassed as an American, the things that he was saying. I can't believe he actually made the Democrats look like the party that understands economics, which is not easy to do because they're clueless, right? Right. But his answers made them, look smart in comparison. But Senator Loomis, who's bought and paid for Bitcoin shill, she asked him a question about China and said, "Hey, what's China doing in crypto?" And the only thing he says, "Well, I've heard rumors that they want to have a token backed by gold that they would use instead of the dollar in trade or as a reserve. and that was it. So he acknowledged that the only interest that China has in crypto is to have what? Backed by gold, to do what Tether is doing. He has no interest in what we're doing, or China has no interest in the nonsense that we're doing. And Bessett seems to understand that. Now, he said it was a rumor, so he didn't say he knows for a fact, but he didn't say that he believed the rumor to be false. In fact, if the rumor is true, this should be a major concern for the U.S. government that China is doing it right. And, while we're, off, chasing rainbows, right, they're doing real things that are going to be harmful to the current economic order that so benefits the United States. As a matter of fact, we got more economic data this week on jobs. We didn't get the December or the January, non-farm payroll number that we normally would get today as the first Friday in February. It was postponed to next week, but we did get some reports. We got the ADP jobs report, which came out way below estimates, 22,000 versus 45,000 estimates. I mean, it was a low bar, and we couldn't even clear it. But that was a bad number that came out earlier in the week. I mentioned that on my podcast, on my main podcast. But what came out later than that was the following day, we got the Challenger job cuts report. 108,000 announced layoffs in January. That's the most for any January since January of 2009. Now, in case you don't recall what was going on in January of 2009, we were in the midst of the global financial crisis, which started in the summer of 2008 and basically was at its worst point in January of 2009. So you have to go back to that point to find a January where U.S. employers announced more layoffs than they just announced this January. So Trump is out there saying, we got the strongest economy in the history of the world, yet we have more layoffs than we had, or we have to go back to the worst economic downturn since the Great Depression. So that does not jive with this economic strength. And in fact, the JOLTS numbers also came out, and they were a huge miss. One of the biggest misses I've seen. They were looking for 245 million job openings, and instead there are just 654 million, a big decline, and the prior month's a November number, which was originally reported at 15 million is revised down to 9 million. So the labor market is extremely weak as inflation is getting stronger. You know, the one thing that Trump has been hanging his hat on is cheap oil. Well, that's about to change. Oil prices were very strong this week. They've been rising steadily. We're closed, I think, $63. We were down about $55 on the lows. So we're moving up, and the oil stocks have been leading the way. The oil stocks continue to make new 52-week highs, leading oil. So I think the oil industry is reflecting that oil has bottomed, and oil is now going to join all the other commodities. I've been talking about that all these commodities are going up. The outlier has been oil, and that's all Trump has been trying to, cherry pick. But of course, I was listening to Scott Bessent testify, and he was asked, are grocery prices higher than they were when Trump was elected? And of course, they are higher, right? That, even the government admits that the prices are higher, and he wouldn't admit it. He kept saying, well, some prices are higher, but other prices are lower. So what? You on balance, prices are up. Some prices are down, but some prices are up a lot, right? And so that offsets the things that are down, but they want to cherry pick and find a few items that may be in your grocery bag that went down in price and ignore all the other items that went up in price. But the fact of the matter is, it's costing you more to do your grocery shopping, and it's about to cost a lot more because the dollar is rolling over. You can clearly see that it was temporarily stopped by all the nonsense surrounding the Walsh nomination. Kevin Walsh to be the new Fed chair, and how he was portrayed deliberately by the administration and then the media as some kind of inflation hawk who's going to come in hot and hike rates or something, or put an end to quantitative easing. That ain't going to happen, because if he was going to do that, he wouldn't have the job. It's obvious that he's got his marching orders, and he is going to follow them. Trump would not have nominated him unless he was confident that he was going to do what is needed to try to make him look good in the midterms. In fact, he's already talking about mailing out these tariff rebate style checks, $2,000 a family. Donald Trump tries to claim that all this inflation is Biden's fault. The problem is, had Trump won and been reelected, it would have been the same. He says that the inflation is because of the deficit spending under Biden. Well, there would have been as much deficit spending under Trump. How do we know that? Well, he was a big deficit spender during his first term. Most of the inflation that we had in the first year and a half under Biden is because of the policies under Trump and the money printed while Trump was president. But what has Trump done so far in his second term? He has taken all the Biden deficits and made them bigger. He has spent more on all the programs that Biden was spending money on. He approved spending more on all those programs. So why should we think that had he been directly reelected, that somehow in that term he would have been for less government spending? He wouldn't have. All this inflation would have happened even if Trump had won. And of course, that means we would have a Democrat in office right now, because the voters would have voted for a Democrat to solve the problems that they would have attributed to a Republican. So Trump is lucky, the Trump administration's lucky, that they can keep blaming every problem on Biden. But the problem is they own the economy now, because Trump has already claimed that we have the greatest economy in the history of the world and has taken credit for doing that, which means voters will hold him responsible for the problem. I mentioned on, I think, my last podcast, you don't win elections in America nowadays by lying to the voters and trying to get them to believe that a weak economy is strong. The way you get elected in America is acknowledging that the economy is weak, and then you lie to the voters by saying that you're going to make it strong. And so the Democrats have got the better message in the midterms and in the generals. Anyway, that's it for this Friday market wrap. Again, I would recommend, as I've been doing on all these Friday market wraps, buy your gold and silver over the weekend. We've had this big correction. We typically have rallies on Mondays. We've had a lot of noise recently, but I think we're going to get back to the same trajectory that we were on before, where we get strength coming out of Asia, because that's where the real buying was or has been, and I expect that to continue. So with silver prices still below $80, it's hard to imagine. I'm now saying that it's cheap to buy silver below 80, but it's been as high as 120. So seems pretty cheap, given that we now have a benchmark that's much higher. So we're buying silver below 80 and $5,000. Gold, 5,000 is the new 4,000. 4,000 was the new 3,000, which was the new 2,000, right? The milestones keep moving up, but you got to keep paying up, because this is what happens when you're living in a world of inflation and de-dollarization. The longer you wait to get rid of your dollars, the less they're going to be worth, and the higher the price you're going to see for gold and silver. The world is going to be moving to gold as a medium of exchange, and I think that will make it very easy for people to pay and be paid, right? What's more important is not that you pay in gold, but that you get paid in gold, right? That way you earn real money, you receive real money in exchange for providing real goods and real services. That's the way it should be. That's what money is all about. That's why Bitcoin will never be money. Because if you provide services or sell goods and you get paid in Bitcoin, you've got nothing. You've got nothing of real value in exchange for the value that you provided.